I'm always looking for good trade setups, and in this kind of market environment, I was looking for a trade setup that's very low capital at risk and has potential for a nice breakout to the upside from a very oversold market. Hi, I'm Larry Gaines from PowerCycleTrading.com, and in this video I'm going to show you a trade setup using a calendar spread on Bank of New York. So the first thing was finding the trade. So one thing I do is I've got a scanner that scans for a certain chart pattern that we call a volatility squeeze. So these are all the different stocks that are in a squeeze. And so went through, there are a lot of interesting looking trade setups. So one that looked really nice because it's very low risk, very low capital at cost as far as the trade setup, when we put it on, was on BK, or Bank of New York, which is Mellon Bank. So the trade setup was, you can see first off with a weekly time frame, we've got here what we call a cycle low reversal from a weekly. So I call this a long-term reversal pattern. So we come down here, we start to bottom out, and it could be an L-shaped kind of formation here, and you can see that it's been churning, building this base, and then finally this week started turning up. So we're getting into the 382 retracement first. Now the other chart pattern here is on the daily time frame, and this is what we call a volatility squeeze, where these dots represent going into consolidation pattern here, where we get a coiling effect and then finally a potential for a break higher. So with this trade setup, was able to structure a very low risk trade for under $100 per spread using what we call a calendar, and this is on BK. So let me go through with you this calendar trade setup. So this is kind of basically an income directional trade setup. So what we did, looking for a potential move higher. So first area of resistance is right in here. This is like a 382 retracement coming in about 46.5. And then we get up here, this is the 50 simple moving average. So about 47, and then up here close to 48 are kind of the targets we're looking at. So came out and bought the July 1 series. So plenty of time to work the trade over 30 days here, and bought the 47 call, and then came out and sold next week's expiration, next Friday, the 3 June 47 calls. So you can see that both strikes are at the 47. So we've got the basically the short strike here is at 47, and that is using the 3 June series, which is a shorter dated, and so that's going to, time decay is going to be a lot faster. And then bought the 47 July 1 series here, so it's going to have less theta decay. So we're playing the spread differential. But the other great thing is, if we want, we could always close out the 3 June spreads, short spread, and roll that up maybe to the 48 or 49 and try to work the trade further up. But based on this trade, if we do nothing, we have potential for this just to be what we call an income trade. And if it goes out next Friday, at our short strike here of 47, this will be up about $75, and that's about a 77% return. But we have the flexibility to adjust the trade and stay with it for a longer, bigger move to the upside. So this again is called a calendar spread, or sometimes referred to as a horizontal spread. So I hope this helps, and I'll talk to you on my next video update. Good luck trading.